Hello and welcome. You tune into Market Fatafat with me, Ankita Saxena, and with me is Ashesha Adwari. In the next 1 hour, we'll get you all the top buzzers in trade that are buzzing away either on the back of news flow, on the back of technical charts. But first up, let's take stock of how the market is shaping up. Ashesha, it's a quiet day in D Street. In fact, we have a very, very range-bound trade that's coming in. Even though on Nifty and Nifty Bank, both we have managed to surpass previous session's closing price at least, but we are very, very range bound nonetheless.
Yes, absolutely. Very range bound, and we're trying to stay afloat on the Nifty. We are absolutely flat at the moment, up barely 13 odd points as we speak. 25,530 on the Nifty. Bank Nifty is up nearly 142 points, near that 57,450 mark. In terms of individual stocks, we have Apollo Hospitals up 3% on the back of that big news piece that came in. We'll discuss that on the show. We have BEL, which is up 2.5%. Reliance Industries on the back of a brokerage report. This one is also holding up over 1.5% in trade. IndusInd Bank, Jio Financial, SBI Life. Those are all the other top gainers from the Nifty 50 index. But this is a show where we take you through all the stocks that are buzzing in trade today. So let's get started. On the technical front, we are now joined by Jatin Gedia, technical research analyst at Mirae Asset Share Khan. And from the research desk, we are now joined by Rabinder. Gentlemen, thank you so much for taking your time out and joining us here today. But Ankita, first up, auto stocks continue to be in focus today.
Absolutely. Auto stocks seem to be in focus today on the back of the auto sales number for the month of June. Now let's take a look at how it has fared. In fact, it has given a good surprise to the street with healthy set of show coming in for the June quarter, for the June month, I beg your pardon. If you look at the scorecard then, Bajaj Auto, we did see Bajaj Auto which posted below estimated numbers, but whether it is Eicher Motors or M&M, they both have posted inline and above set of numbers coming in, because as far as the scorecard is concerned, we do see inline numbers coming in for the M&M auto pack, but above set coming in for the tractor part. Also for Eicher Motors, we are seeing better than expected numbers that are coming in as far as Eicher Motor is concerned. Now for M&M Auto, we do see for the passenger vehicle segment, we do see an uptick of 14% on a year-on-year basis, but a decline coming in on a sequential basis of 6% as far as passenger vehicle is concerned. As far as tractor is concerned, M&M Tractor, the sales has been up 13% on a year-on-year basis, and on a sequential basis also, it was a good show coming in with an uptick of 31% on a month-on-month basis, and that was beating the street estimates. Also, as if you look at Eicher Motors, for two-wheelers, we did see a jump up of 22% on a year-on-year basis, and on a month-on-month basis, it remained absolutely flat for Eicher Motors. But coming to Bajaj Auto then, Bajaj Auto, which posted below street estimate numbers, two-wheelers, we did see an marginal uptick of 1% coming in on a year-on-year basis, and a negative 6% on a sequential basis as far as two-wheelers is concerned for Bajaj Auto. So Bajaj Auto was the only laggard as far as the auto sales numbers are concerned, but besides that, a decent set of numbers coming in for the auto pack.
Well, yes, and the entire auto sector in focus on the back of that, but let's put the spotlight in particular on Bajaj Auto. Jatin, you've picked up this stock for us. Tell us, what do the charts indicate?
Yeah, so as far as Bajaj Auto is concerned, we believe that it is nearing its end of a consolidation that is happening since the last 5 weeks. So today it is forming a hammer candlestick kind of pattern on the daily chart. So this pattern generally occurs at the end of a trend. So currently the correction is going on, and so we believe that it's nearing its correction, or the correction might have completed. So from here on, we are expecting a trend reversal in the case of Bajaj Auto from a short to medium term perspective. On the upside, we believe that 8600 to 8650 should be the immediate upside, whereas the crucial support is placed around 8200. So risk reward is quite favorable to go long in Bajaj Auto.
Risk reward is favorable to go long on Bajaj Auto. That's the technical view coming in. But let's put the spotlight on Apollo Hospitals then. This is the biggest gainer on the Nifty 50 index, up nearly 3% as we speak. On the back of news, the company said that it will be listing its digital and pharmacy business over the next 18 to 20 odd months. Shareholders will receive about 95 shares of new firm for every 100 shares that they hold of Apollo Hospitals. There will be no capital infusion as a result of this restructuring that is likely to take place. Of course, the management has clearly said that it will take about 18 to 21 months for the deal and the restructuring to be completed. Healthco is targeting nearly 25,000 crores of revenue by FY27 with 7% EBITDA margins for the corresponding period. Remember, the company had not shared any IPO timeline earlier, but now they've specified a timeline. This is likely to be done over the next 18 to 21 odd months. The stock is in focus, up nearly 3% as we speak.
All right, that's Apollo Hospital. That's up and away 3% in the back of that demerger plan. But the demerger plan will benefit shareholders and unlock a lot of value. That's the word coming in from market expert Tapan Doshi as well. He also shares his take on the hospital majors revenue and valuation visibility going ahead. Let's listen in.
If you know this digital business, pharmacy business, retail pharmacy business was making losses, and that was actually bringing the profitability of Apollo Hospital overall down. Now, as it is going to get demerger, value unlocking will happen. If you see the current EBITDA of Apollo Hospital is around 14 to 16%, which may go to 20%. Post this demerger. Again, the valuation perspective, even if I see, I think it will go to above, maybe 15-20% higher when the demerger normally happens. So Apollo Hospital is also doing very well. If you see their expansion plan is almost, you can say 7,000 to 8,000 crore of capex is there. 3,000-4,000 more beds they are going to bring. Even if you say average revenue per bed is increasing of almost 6 to 7%. So all this combined, I think this is better for the company, and both on the terms of ROCE or ROA or even margin point of view, I think it will benefit it. So one should hold on, and I think good times are ahead for Apollo, at least looking at that deal I can feel.
So that's the view coming in on Apollo Hospitals. That one is up 3%, the biggest gainer on the Nifty 50 index. But shifting focus then to Bharat Forge, Rabinder, the stock is declining, but any news piece over here?
Well, as Bharat Forge is in focus, where the board has approved two key strategic action. First is an internal restructuring of its defense business and an upward revision in the acquisition of cost of AM India Manufacturing Corporation Limited. Bharat Forge will transfer identify asset and related obligation of its defense business to its wholly owned subsidiary Kalyani Strategic Investment via its estimated sale, and the Kalyani Strategic Investment will issue optionally convertible redeemable preference share of up to ₹500 crore asset consideration. And apart from this, board also approved to increase the acquisition cost of AM India from 545 crore to 700 crore. So back of this increase in the acquisition cost, stock is under pressure, and the stock is down by over 2.5%.
All right, moving on from Bharat Forge to the next counter that is in focus. Jatin, you picked out Balkrishna Industries for us. Tell us, what do you see in the charts for Balkrishna Industries? Because if I look at the chart for Balkrishna, I mean, in the last 6 odd months, it has been in a corrective phase. It's been consolidating from here. How do you see this stock moving?
Yeah, so rightly pointed out, it has been in a corrective phase, but however, the recent price pattern that it has formed, technically it has formed an ending diagonal pattern and also broken out of that on the upside. So that indicates a trend reversal. So we can expect some amount of a pullback or a relief rally in Balkrishna Industries going ahead. So considering that, we are expecting an up move towards 2600, 2650 on the upside, and the crucial support for the stock is placed around 2420. So that's a quite a good risk reward ratio to go long in Balkrishna Industries at current level. So recommending a buy for a target of 2600 to 2650 on the upside.
All right, moving on then to the next counter that is in focus today, and that is IREDA, that is in focus on the back of its operational updates. Now remember, we're going to start seeing the numbers for Q1 results, earnings that will start trickling in. But before that, we've also started receiving business updates from companies. So Q1 business update for IREDA, the loans sanctioned are up 29% to 11,740 crores, and the loan disbursement is up 31% to 6,981 crores. The loan book is also up 27%, and that stands at 79,960 crore rupees. On the back of these operational updates, rates. Irida has given up those morning gains that we saw. In fact, it is trading towards the day's lowest point right now, trading with cuts of 1/10%.
Okay, so that's Irida for you. The stock is holding on with a decline in today's trading session with Jindal Steel. This one you've picked up for us, Jatin. What do the charts indicate for this one?
So in the case of metal pack, we are expecting some amount of rally. After a sharp rally in the previous week, since last couple of days, there has been some consolidation move towards its early moving averages, and thereafter we are seeing pick up once again. So we believe that the consolidation phase is over, and now we are expecting some move in the metal pack. So Jindal Steel, we have picked up from that space. We are expecting levels of around 1000 in the case of Jindal Steel. The crucial support is placed around 920. Currently, good risk reward ratio to go along. Buying at supports is suggested.
That's the view coming in on JSPL, but let's put the spotlight on paint stocks. The entire sector is in focus, especially after the presser that was conducted at 12 p.m. on the back of that new acquisition that JSW had announced last week. And JSW Paints MD Parth Jindal also said that they are aiming the top 3 spot in the Indian paints industry. But apart from that, we also had a report that ICICI Securities came out with, where they have upgraded both Asian Paints and Berger Paints from reduced to add rating. They've given a target price. In fact, they've reversed the negative stance of about 4 years, and now they've upgraded both of these counters from reduced to add rating. They say the industry revenue growth is likely to recover in the second half of FY26. They've given a target price of 2,700 for Asian Paints, of about 650 rupees per share for Berger Paints, and they say Birla Opus has a reach of about 55,000 dealers, which is higher than the number 2 player, Berger Paints. So on the back of this report and on the back of this management commentary that JSW Paints has come out with, both these stocks continue to be in focus today.
All right. Keeping with the paint companies, then JSW Paint MD Parth Jindal says that they are eyeing the top 3 spots in the Indian paints industry with the AkzoNobel India acquisition. My colleague Anurag Joshi is here with the highlights of what the management had to say. Let's listen in.
JSW Paints and AkzoNobel have just concluded a press conference to announce the acquisition of AkzoNobel India's business by JSW Group. According to Parth Jindal, the managing director of JSW Paints, about 70% of the financing for the deal has been tied up internally, while interestingly for the remaining 30%, the JSW Group is seeking funding support from private equity firms. So this deal funding will be a mix of both internal accruals and private equity support if that comes. And the plan now is to keep AkzoNobel India a listed firm, and Mr. Jindal said that at no point the JSW stake in AkzoNobel India will exceed 75%, and he sees the decorative revenues rising to about 6,000 crore rupees from 3,700 crore rupees. According to Greg Pugh-Guillaume, who is the CEO of AkzoNobel India, they are planning to remain a tech partner to JSW for the combined paints business once the merger is completed, and they are selling the liquid coatings, but they would continue as the powder provider to the JSW Group.
I am sure that JSW Paints and Dulux and AkzoNobel together, we could really challenge for the top 2 in the Indian paint industry. So at JSW, we have always said that in whichever industry we enter, we would like to remain in the top 3, and we would like to enter that. Like I mentioned, JSW Paints is very strong in the value and mass premium segments, and Dulux, as the name suggests, is one of the market leaders in the premiums. So when we combine the two, we're very, very confident, and that will allow us to significantly expand our decorative revenues from a combined total of about 3,700 crores once we come together to about 6,000 crores should be very, very quick and very straightforward. We intend on keeping ANIL as a listed entity.
That's the word coming in from the management of JSW Paints on the back of the recent acquisition of AkzoNobel that they announced last week. But shifting focus to big boy Reliance Industries then, and Nuvama has come out with a report. The stock is surging in trade today. Rabinder, tell us more about what Nuvama has to say on this.
Plus, Nuvama has come out with a note on Reliance Industry, and they have given a buy call with target and hike target price to rupees 1801 as compared to earlier target price of rupees 1701. They say that Reliance has commenced selling modules extremely, and they forecast it shall add rupees 3,800 crore, that is 6% to PAT, further integration into wafers and polyskin, etc. to add upside potential. They say that the Reliance HJT modules will attract more than 5% premium to top console with the more than 23% efficiency, and the Reliance HJT facility shall yield an EV of $20 billion, triggering a valuation re-rating similar to Reliance Jio launched in 2017. And they say that by FY30 the entire new energy to add 50% plus to consolidated PAT. So back of this note, Reliance Industry is in focus, and the stock is trading at and the stock is up approx 2%.
All right, so that's Reliance Industries on the back of that positive bullish brokerage note coming in. But moving on to the next counter, which is in focus, Trent is what you picked out for us, Jatin. Now, Trent has seen significant run up, and then of course we've also seen that correction coming in on Trent. But from here on, what are the levels that you're watching out for as far as Trent is concerned? What is the upside for this?
Yeah, so I believe that there is a significant upside that is still left in the case of Trent. Because the stock corrected from around 8,300 to almost 50% till 4,500. Now the stock is currently forming higher tops and higher bottoms and sustaining above its short-term moving averages. In the penultimate trading session, we did see a sharp up move, and today we are seeing a slight bit of consolidation. So this consolidation today that we are seeing should be considered as a buying opportunity. From a short-term perspective, I am expecting 64.20 on the upside, and the crucial support is placed at 59.50. So that's a decent amount of up move even from current levels. So from that perspective, we believe that Trend is looking attractive at current levels.
Okay, so Trend is looking attractive at current levels. That's the technical view coming in. But with improving consumer sentiment, premiumization is catching up. How is India's retail space expected to shape up going forward, especially the value segment? We caught up with Kumar Rajagopalan, CEO at Retailers Association of India, to discuss this. Let's listen into what he had to say.
Frankly, the premium category was anyway doing well. When I talk about premium, I think super premium categories. Those were really doing well over the last 3, 4, 5 years' time. The mid segment was under pressure, and I think it's continuing to be under pressure. The bottom of the pyramid, the value segment, is where we are seeing some action now. And as far as value segment is concerned, especially for retailers who understand that they have to come out with innovative items, they have to give items that are fashionable as well as affordable. I think they have been able to really do well, irrespective of the kind of category that they are in. So I think customers at the lower middle class segment are also now jumping in to buy, and hopefully that should continue.
All right, moving on then. The next counter coming to you, Jatin, you picked out Lupin for us from Pharma Pack. Now, as far as Lupin is concerned, again a stock that is in a corrective phase, has been in the corrective phase in the last 6 months. So from here on, how do you see this stock shaping up?
Yeah, see, in the case of Lupin, the stock has been in a corrective phase since mid-April, I suppose. So now, in terms of price pattern, it has formed a falling wedge, and now is currently trading in the last leg of that pattern. So, the pattern is around completion, and that makes it a very good entry point at current levels. So we believe that there is a decent upside towards 2050 to even 2100 from a short-term perspective. So, and the crucial support is placed around 1900. So a fairly good risk-reward ratio, trend reversal on the cards in the case of Lupin. So that is a good buy at current levels.
Okay, so it's a good buy at current levels. That's the technical view coming in on Lupin. But let's shift focus and let's talk about the IT sector then. HCL Tech is in focus after it announced a multi-year strategic collaboration with OpenAI. The company says this is to drive large-scale enterprise AI transformation as one of the first strategic services partners to OpenAI. So they've partnered with OpenAI for the back of this particular collaboration. The stock is in focus today. Although it has given up most of its morning gains, it is now sitting with a cut of nearly 0.8% as we speak.
All right, moving on to the next counter. Vedanta is what you picked out for us. Jatin, tell us Vedanta. What do you see on the charts for Vedanta?
See, Vedanta is one stock which we like from the metal pack. So earlier Jindal Steel was looking good. Apart from that, Vedanta is also consolidating, I believe, since last 3 weeks, and now we believe that there is a scope for a breakout in this stock, which can take the stock towards near to 500 odd levels. So we believe that Vedanta is a very good buy at current levels. On the hourly charts, a small bullish flag pattern has been formed, and we are expecting a breakout on the upside. So all parameters are suggesting that a sharp up move is on the cards in the case of Vedanta. So that is a momentum play from a short-term perspective. Support is placed at 450, and on the upside the target area is around 500.
Okay, so we could see levels of 500 on Vedanta. That's the technical view coming in. We need to slip into a very short break on that note, but we'll discuss many more buzzwords on the other side of the break. Don't go anywhere.